Hey everyone, welcome back to Corporate Decoder, where we decode the secrets hidden within your favorite company filings. Today we are diving into Eledon Pharmaceuticals Incorporated's latest 8K report. And let me tell you, there is some interesting stuff happening about their stock offering. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you are subscribed and ring that notification bell so you don't miss any of our deep dives. Also, join our growing Discord community for more real-time discussions. The link is in the description below. Alright, let's get straight into it. Eledon Pharmaceuticals Incorporated, also known by its ticker symbol Eldon, which trades on the Nasdaq, is reporting a significant development. This isn't your typical quarterly update, but an 8K filing, which usually signals major events. Today's focus is on a public offering of their common stock. The company announced it has entered into an underwriting agreement to sell a substantial amount of its common stock. They are offering over 15 million shares at a price of $1.65 per S-share. They are also offering pre-funded warrants at a slightly lower price of $1.649. These warrants are essentially a way for investors to buy stock later at a very low price, meaning they are almost like buying the stock now. This offering is being made under their existing registration statement, which means they had filed paperwork with the Securities and Exchange Commission, and it was declared effective. The expected closing date for this offering is the 13th of November, 2025, which is just around the corner. The company anticipates raising a significant amount of money from this offering. After deducting fees and expenses, they expect to pocket around $46.5 million. If the underwriters decide to purchase additional shares, which they have an option to do, that amount could climb to approximately $53.6 million. That is a substantial chunk of change for a company. So what is the deal with this agreement? It is pretty standard stuff for a public stock offering. Eledon is promising certain things to the underwriters, and the underwriters are promising to sell the shares. They've got what are called representations and warranties, which are basically promises that all the information is correct. The agreement also includes indemnification, which means if something goes wrong legally because of this offering, the company and the underwriters have agreed on who will cover the costs. Now, here is a critical detail for anyone looking to trade this stock right after the offering. The company's executives and directors have agreed to lock up agreements. This means they cannot sell their shares for a period of 60 days starting from the 12th of November 2025, with a few exceptions. This is a common practice to prevent a flood of shares hitting the market immediately after an offering, which could drive the stock price down. The proceeds from this offering are earmarked for a very specific purpose: to fund the continued clinical development of their product candidates and to advance their pipeline programs. They also mention general corporate purposes, which is essentially a catch-all for other operational needs. This tells us Eledon is focused on growing its drug development pipeline, which is a crucial aspect of any pharmaceutical company. There is a specific clause for the pre-funded warrants that limits how much stock a single holder can own after exercising their warrants. This is to prevent any single entity from gaining too much control or influence over the company through these warrants, and it is set at 4.99% or potentially 9.99%. This is a pretty standard takeover or ownership control provision. The filing also includes a legal opinion from O'Melveny and Myers LLP. This is a standard piece of documentation that confirms the shares and warrants being offered are legally sound and properly structured. Now, let's step back and look at the bigger picture. Eledon Pharmaceuticals decided to raise a significant amount of capital through a stock offering. This typically means they need funds to fuel their growth, likely for research and development in the highly capital-intensive biotech sector. By raising this money now, they are signaling confidence in their ability to develop their drug candidates and potentially bring them to market. On the flip side, issuing more stock can dilute the ownership stake of existing shareholders, if the company does not successfully use these funds to achieve substantial growth. Current investors might see their percentage of ownership decrease without a corresponding increase in the company's value. The key here will be how effectively Eledon utilizes these funds to advance their pipeline. The lockup agreements are important to watch. Once that 60-day period expires, institutional investors and insiders will have the flexibility to sell. This could lead to some volatility in the stock price if there is a rush to sell. Overall, Eledon Pharmaceuticals is making a bold move to secure funding for its future. The success of this offering will hinge on their ability to execute their development plans and bring their product candidates to fruition. The market will be watching closely to see if their strategic use of these funds translates into tangible progress and ultimately shareholder value. It is a calculated risk, and time will tell if it pays off for Eledon and its investors. Alright, that is our breakdown of Eledon Pharmaceuticals Incorporated's latest filing. What is your take on this stock offering and what they signal for the company's future? Let us know your thoughts in the comments below. If you found this analysis valuable, Smashing that like button really helps us out, and subscribing with notifications turned on ensures you won't miss our future deep dives. And don't forget to check out our Discord community in the description for more real-time insights and discussions. Thanks for watching Corporate Decoder. See you next time.